All right, guys. So I would like to welcome all of you and thank you very much for joining us. From my experience with this particular module, I would like to believe that most of you are new to accounting because those who did accounting, especially in high school, or who have a background or a good background in accounting, would not normally want help with things like your basic accounting equation and your double entry and your general ledger. So I would like to assume that most of you do not have accounting background. And so my teaching approach will assume that you need the basic knowledge of accounting. Right, I want to believe as well that you guys have already started studying. I can see from your Telegram chats, from your chats everywhere, that you do ask questions about double entry, about general ledger, which is very encouraging because you need to be pressing forward already. Now, this particular discussion is going to focus on double entry, right, which is a rule for recording transactions. Now, that rule comes from this identity or this equation. We call it an equation, right? But it's actually an identity. And the equation says the assets that we have, right? The assets that we have as a company, as an entity, all right, we refer to a firm as an accounting entity. So the assets that we have as an entity, as a company, it's either the owners provided the funding, right? Or we borrowed. Okay, so we look at assets that we have. Then we need to know, but where did we get the money to acquire those assets? Then we remember that that money is either was provided by the owners of the company, which is equity, or if it's not the owners, then it's third parties who owe a claim. We have a claim in the assets of the entity, or is the liabilities. So to make that simple, let us assume that you start a company, all right? You start a company that and you acquire a motor vehicle, right? Then when you acquire a motor vehicle, right? So you acquire a motor vehicle for 200,000. So that motor vehicle for which you acquired for 200,000 is an asset, right? And we need to determine where you got that money from. So some of the money might have been your savings for a very long time, which is 100K. So that's your equity. Probably you borrowed from friends and relatives. That's your liabilities. So you managed to raise 200,000. You bought an asset for 200,000, and you need to account for the source of the money, which is the equity and the liabilities. So what we're going to do in this particular discussion is that we're going to show you how transactions affect assets, equity, and liabilities in a discussion of the basic accounting equation, right? The effect, or rather, the double entry effect of transactions. So this first page that you can see here, right? I included the page, right, so that we can be reminded again. We're not going to focus on these elements of financial statements, but this is just for a reminder to say you need to know that we have elements called assets, and they can be current and non-current. In one of the recordings which I shared with students publicly, which can be retrieved or from YouTube, I do explain what is all these things and how do we identify them in a transaction. All right, so we need to know that there's assets and we need to be able to identify the assets in a given scenario. We need to know that there's equity, which is made up of drawings. Drawings reduce equity, expenses reduce equity, capital increases equity, and income increases equity. Now, we need to be able to identify those elements which constitute expenses of the business, those elements which constitute income of the business, and of course, your liabilities, current and non-current. The focus of this discussion is on identifying transactions. Then we need to know to identify the effect of those transactions on the basic accounting equation, or their effect on assets, equity, and liabilities. So we're going to demonstrate that to you in this particular discussion. So this is what we're going to do. We'll take your questions later on, because what we've come to realize over time is that some students just want to listen and go away. And then after that, we can take those with questions, then we can try to explain anything that you might be interested in. All right, so we hope that you're going to benefit. And if you perhaps have a problem with some of the things that we discussed, this is going to be posted on YouTube. So you'll be able to access this recording on YouTube, right? So the link is going to be posted on the Telegram, on our Telegram group. Remember, there are a lot of Telegram groups. We have our own Telegram groups. And we're going to post this link on the YouTube of our Telegram group. And just to give you an idea of how how you might study this module, some of you, if you do not have accounting background, you remember that you need to do practice, right? Very important to do practice on a daily basis. Even a small question, a single question, on a daily basis, but you need to do practice. You might also want to enlist the assistance of high school students. Let's say you have a neighbor, a younger sister, a sibling who is doing accounting, right? So you can just ask here and there. It could be a colleague at work. It could be fellow students in your various social media groups. It could be the UNISA platforms that you utilize. Or in the worst scenario, you can look for a private tutor to help you. And we are such private tutors, and we have been helping students for a very long time. Or sometimes we do offer free classes because there could be those who can pay or for any reason. So we also offer those free classes. We also offer free resources for students. But if you are interested, if you could be interested in extra help, you can always come and inquire from us. Right, so let's get started here with the questions. These questions that we're going to discuss here are questions from previous assessments. All right, so you might find these questions exactly as they are in your assessment, because these are harvested from previous questions. Now, this question wants to test us if we can identify assets in a scenario. Are we able to identify assets? Are we able to identify equity? Are we able to identify liabilities? So you need to remember that the basic accounting equation says assets. The assets that we have, it's either they are provided by the owners or we borrowed. And you can play around with this, right, to say the assets minus equity, correct, is equal to liabilities, or equity is equal to your assets minus your liabilities. So you need to, when you're doing your assessments, you need to make sure that you see how the basic accounting equation has been arranged, because they can play around. And if you don't see it, you could default into thinking that the left-hand side is going to be your your assets, whereas it's actually liabilities or equity. So they can swap the elements around, but the equation will always have to balance. Right, now let's have a look at this particular question. All right. So this particular question says, we have Luna Smith is the owner of this plumbing business. Then on 30 September, they provide you some of this information for the business. Now the information says, we have clients or customers owing, all right, for plumbing services rendered on credit. So what happens here is Luna Smith goes out to offer a plumbing service, and these guys haven't paid yet. So there are clients owing for plumbing services. So there's our customers. We sold to them our service on credit. We rendered a service or we delivered goods, whatever the case is. The point is the customers have not yet paid. And as a result, they owe us 36,000. This 36,000 in the general ledger, in accounting terms, it is called trade receivables, right? Or debtors, or accounts receivable. Or if you're doing law, they will call it clients control, right? So this is trade receivables, and you categorize this as an asset. So we have an asset of 36,000, right? So we do have an asset there, and the amount is 36,000. So we're going to identify the various categories which these transactions belong to. We're going to identify whether something is an asset or an equity element or a liability. So we have here equipment owned. So equipment is going to be an asset. So this also is an asset. Then we have a bank balance, but it's unfavorable. In other words, it's a bank overdraft. All right. And you should be able to remember from the elements of the basic accounting equation that your bank overdraft will be a liability because we owe the bank money. All right. So we need to identify that. We need to identify that as a liability and also as a current liability. So if we are going to identify those debtors or trade receivables as assets, we can also thin that to current assets. That is very important for your preparation because sometimes the examiners want you to present your assets as either current or non-current. So they want you to distinguish in your answers, distinguish between current and non-current assets. So if you come back here, you will see that this is a liability, also a current liability, right? Then we have Luna's Plumbing owes suppliers for parts purchased on credit. So basically we buy parts that we need for our business and we haven't paid. So we owe 25,000. So that is a liability, which is a current liability. Because we owe suppliers, that's going to be trade payables control, right? Or creditors control, that's the same thing. Or accounts payable. We normally use the terms trade payables control or creditors control, and we identify this as a liability. Then we also have vehicles owned by this guy. So that's going to be an asset, also a non-current asset, the same as equipment, which is going to be a non-current asset. You know that non-current assets are going to be used over a long period of time that is more than 1 year in use. Right. So that's the theory of an asset. So what the question here required the correct representation of the accounting equation. So what was provided is equity is equal to assets minus liabilities. So you had to do a calculation and you enter the amount for equity here. You do a calculation and enter the amount for assets. You do a calculation and enter the amounts for liabilities. Right? So as you know, we are provided assets. So we have assets, trade receivables 36 plus 100 plus 120. And if you subtract the liabilities, which is 50 and 25, we will be left with the equity. So we can determine equity by saying the total assets minus total liabilities. Then we're going to get the equity. So this is one of the questions that was asked previously, where you needed to identify your assets, identify your liabilities, then apply the basic accounting equation to get the total for equity. So this 181 is going to be your total assets here minus your total liabilities, right? So that is our position. Right, if you have any questions, I'm gonna open up for questions, so don't worry, I'm gonna open up for questions, then I will answer your questions. And this is being recorded, so you can access it anytime. Right, next we go to the next question. Now the next question, I'm going to show you a little bit as well of the double entry, the general ledger accounts. Because this is our first session, I need to explain to you what is a general ledger. So a general ledger is like a folder, right? Remember that we, as a business, we need to be able to trace our income, to trace our expenses, to trace our assets, to trace our liabilities, so that we can know who hasn't paid us our money, who haven't we paid, so that we can pay. We need to know all those things. So we need to keep a record of the transactions that we go through. So that record is recorded in the general ledger. So the general ledger is the folder where you record all your transactions that you want to track. So it depends on what you want to track, all right? For example, if you have expenses, you might want to track insurance expenses. How much are we spending on insurance? You might want to track your salaries and wages. So for every item of your business that you want to track, you can open an account in the general ledger, so that whenever we pay for insurance, we're going to come and record it under insurance, right? So let's say we open an insurance account. It will be like this. And this is an expense, right? So expenses are recorded on the debit side. So this is your debit side. This is your credit side. So we pay for January, right? We're gonna record 1,000. We are recording this in the folder for insurance, which is under the general ledger, because we want to know at the end of the day how much insurance do we pay. So anything of interest, whether it's water and electricity, we want to know the total expenditure. We're gonna open a general ledger account and keep on recording each time there is a transaction for that particular account. So then in February, 1,200, we're gonna record it there. We pay in March, we're gonna record again. Then at the end in December, then check to see how much insurance did we pay for the whole year. Because now we need to do financial reporting. We need to tell the owners, we need to tell the users of financial statements how much insurance did we pay, how much salaries and wages, the total, how much revenue or sales did we make, how much is the charge for telephone expenses. So anything that we would like to track, we're gonna open an account called a general ledger account. We're gonna record all the transactions under that account, right? As long as they pertain to that particular account. So that's a general ledger. And for you to be able to do general ledger entries, all right, you need to identify accounts as either assets, because if they are assets, they increase on the debit side, right? Each time you have more assets, then for example, it's inventory. Each time you buy more inventory, you go to the debit side, you record more inventory. If it is an expense and it's increasing, each time you have more, you pay more wages or salaries, you're going to go on the salaries and wages account. Then on the debit side, you're going to record each time you pay salaries, you record. Each time you pay salaries, you record. Right? So that at the end, you want to know how much wages and salaries did we pay? How much was the repairs and maintenance cost? How much was the water and electricity? So each time it's an expense, you record on the debit side. If it is income, each time you have more income, you record on the credit side of the ledger account, and so forth. Right? So I'm sure that you guys have already gone through some of that. So what we're going to do in this particular question. All right, so we have the following transactions during the month. We need to identify the general ledgers here. So on the 1st of April, they purchased stationery. So we have a stationery because we need to monitor how much stationery we're purchasing. So we have a stationery account, right? So we have stationery, and this is an expense, right? So stationery account is an expense, but we paid by cash. So if we pay by cash, then now we're gonna have to deal with our bank account, right? So we have two accounts here, and the bank account is an asset, all right? So we paid 680. So in other words, we reduced our asset, right? And the assets reduced on the credit. So the general ledger account you're going to credit is the bank account, and then this is an expense that has increased. We need to record under stationery to say, oh, we have another expense for stationery. We need to record that under stationery, so that at the end we will know how much stationery did we spend on, right? So we're going to have to debit your stationery account, right, with 680. We're going to credit the bank account with the 680. We credit the bank account because the bank account is an asset, and assets increase on the debit. But in this case, this asset did not increase, it actually decreased. So it will decrease on the credit side, right? So we see that our assets have decreased, our expenses have increased, right? So if you come here, the effect of this on the basic accounting equation is our assets have decreased because the money went out, right? Our assets decreased. And we have more expenses now because we bought more stationery. So our expenses have increased. As a result of our expenses increasing, this will reduce our profit, right? So our equity is also going to decrease. All right. And one of the things that you need to know when you do double entry is that mathematically your things must balance. For example, here we have a decrease in equity of minus 680 because we got more expenses. The more expenses we have, the more, and it means that we're going to have less profit. If we have a high expenditure, then our profits are going to be low. So that's not good for us. That's not good for the owners. So if we have more expenses, then that means that our equity has been reduced. So if you say minus 160 is equal to minus 160, sorry, minus 680 is equal to minus 680. So mathematically that makes sense, right? Because that's mathematically correct. So that's one control that you can use when doing accounting. You can always check to see if the things make mathematical sense, right? That's brilliant. Then in this case, we have a second transaction on the 2nd of April. So the transaction says on 5 April, we paid water and electricity. So water and electricity is an expense. Right? So this payment reduced our profit. So we're going to record it as -4 under equity. It reduced our profit. It's because it's an expense. Okay. And this also reduced our money in the bank, so it also reduced our assets. Okay. So the reduction of profit here doesn't occur when we pay, right? It occurs when we record for the first time the expense. So if we record the expense, whether we paid it or not, as long as we have recorded it, it will reduce the profit. So the reason why these expenses are reducing profit is we are recording them for the first time, right? And we are recording them as expenses. So the more our expenses increase, then the less the profit, all right? Whether we paid or not, but in this case, we happen to be paying as well. So if you would like to do your journal, your double entry here, you debit your water and electricity because it's an expense that is increased. You're going to credit your bank account because it's an asset that has decreased. If you'd like to understand more about debit and credit, we have shared recordings with you on YouTube. They are there. You can go there. You can spend as much time as you want on there. Right, and then later on, we became lucky because we received 3,900. So our bank account increased by plus 3,900. We received from a tenant for renting a part of the business premises. So we received income. We also need to record that income that was that we got, right? Because sometimes we record income even though we haven't been paid, right? Because as long as we become entitled to that, it's our money. The agreement says you must pay us rent. So once it becomes due, we record that as income, whether it's paid or not. So when we record this rent, when it becomes due, then it's going to increase our profit. It's going to make us happier. So it's a plus 3,900. There were no liabilities here because we didn't owe anyone. We paid, and we were paid. Right? So we never owe anyone there. So the net effect of the above transactions on the assets. So if we look at on the assets only, it's going to be minus 680 minus this plus this. So the net effect is a reduction of minus 1020. The question says, what will the net effect of the above transactions be on assets? Right. So I did include this equity so that I can demonstrate, but the question required just assets. So what they would do is that they would want you to write when you go through the assessment, there is a space where you can actually type in the effect, and then they give you the instruction. If it is a negative, do this, what to do with your decimal places. So in this case, you would put in a minus 1020 as the net effect on your assets. So I hope that makes sense. If you kind of struggle, you can access this again later on YouTube. You can also access other recordings that were recorded prior to this one, so you can benefit yourself. Right, now let us go to this next question. On 23 March, what happened? We have a bookkeeper who made the following electronic payments. One, to the municipality, they paid for water and electricity, 5,000. So the water payment, which is water and electricity, reduced equity because it's an expense that was recorded. And the payment also reduced assets because the money went out. Right. Then we also paid 3,000 to salaries and wages. So what that does is it reduces equity because it's an expense that was recorded. And it reduces assets because the money went out. So the net effect is our assets decreased by a total of 8,000, or it's a minus 8,000. Then our equity decreased by a total of 8,000. And like I said, if you want, you can check the mathematical logic. Minus 8K should be equal to minus 8K. And I've said to you, remember, they can swap around these things. They can put liabilities here, they put equity there, and assets there. Right? Somehow they can play around as long as the equation is going to remain well balanced. Right now we go to slightly demanding questions, but you will enjoy them. Right, we almost finished. We have 2 more questions to do, and then now I can take your questions, and then we can talk. And right, so we have on the 1st of February 2002, there's a barber who paid the municipality 6,400 with the credit card of the business for electricity. The bank account of Kulani Barber says had a credit balance. Now we need the correct recording of the effect of the given transactions on the general ledger and the basic accounting equation. So in other words, they want us to determine which account is going to be debited, which account is going to be credited. For us, it's going to be very easy because we are recording this expense for the first time, all right? So it's water and electricity, for electricity. So we're going to say, we normally refer to that as water and electricity, but in this case, we can just say electricity. And that's going to be 6,400. So what this means is we should go to the electricity account and place a 6,400 on the debit side. And for now, we didn't pay using the bank account, we used the credit card. So we now owe the providers of the credit card that money because they provided us the cash. So we're going to credit the credit card or the credit card or the trade payables control, which is a liability, with 6,400. Now, if you look at this setup, what this means is we must go to the electricity account. Then on the debit side, we put in 6,400. We must go to the trade payables control account. On the credit side, we put in 6,400. So if we do that, if we follow that instruction, then the electricity account will look something like this. Right? Because we're supposed to debit the electricity account. So we're supposed to put in the 6,400 on the debit side of the electricity account. And then we come again under the credit card account. This is the debit side, this is the credit side. Because we owe these guys some more, we have used their money, they provide us a service and we've made use of their service, so we obviously owe them that money. So this instruction says we need to go to this account, and on the credit side of this account we need to record 6,400. So we come to here and we record 6,400. Now we have recorded this in 2 accounts, right? This is the first leg of the transaction recorded here. The second leg is recorded here, right? So we have 2 legs, that's a double entry. So what that means is the description you're going to put here, you are only saying where did the other entry go. So the other entry went to credit card or trade payables control, right? So that's the description you're going to put here. And when you record this 6,400 here on the credit side, you need to explain where the other entry was made. So the other entry was made in the electricity account. Right. So now this is how your general ledger will look. Right, and the effect of this on the basic accounting equation is obvious. Let's say we have our assets being equal to the equity and the liabilities. So assets are not affected. We didn't have anything here that was affected, but equity is affected because this is an expense. We are recording an expense for the first time, and it's this electricity. So it reduces our profit by 6,400 because it's an expense that we have recorded. And this is going to be a minus, right? Then our liabilities have also increased because we now owe the credit card company 6,400. They gave us a provision and we have used that provision. So we have to repay to them 6,400. All right. So this is going to be our basic accounting equation. Right. All right. There's a lot of things that we can talk about, but we cannot discuss everything in one session. So some of the things you will find them recorded for you on YouTube, and you can enrich yourselves there. Then we have another transaction. So I want this one to be the last. There's another one. All right. So we have an entity which had a bank overdraft balance of 2,200. Then on 19th February, the following day, a tenant made a direct payment of 3,200 into the bank account. So we had a bank overdraft, and then somebody deposits money into our account. So they want the correct effect of this on the basic accounting equation. To enrich this, we receive money. So it means our bank account has increased. Our bank account is cash, is an asset, right? So we have to credit, you have to debit an asset when it increases. So the bank, which is an asset, has increased by 3,200. There's no question about that. And this is a tenant, right? Is it a tenant for what? Tenant, probably rent, right? So we can say income or rent income, which we received. We have to record this as well, so that at the end of the year, we know how much rent did we receive. So we're gonna record it under the rent income account. So it's 3,200. So if you go, what this means is you must go to the rent income account in the general ledger, click it open, then on the credit side of that rent income account, write 3,200. So that's what we're gonna do. So we come here, we have a debit, we have a credit, and the name of this account is the rental income account. The instruction is go to the credit side and write 3,200. So that's the instruction. So I have obeyed the instruction. Then the other instruction says go to the bank account. Click on your general ledger, click the folder for bank account, then go to that account. On the debit side, enter 3,200 to say we have received 3,200. We need to record that in the account. We are keeping track of things for the business. So this is my bank account. This is a debit. This is a credit. This is the format of the general ledger. Then on the debit side, I must enter 3,200. But where was the other entered? It was entered in rental income. So I have to say rental income is where the other one was entered. Then under rental income, I have to say the other was entered, other leg was entered in the bank account because it's a double entry. So I have to explain to the whoever is using the account where was the other entry made. All right, so I'm going to explain here that it was made in the bank. So if I see this as an accountant, then I know that the bank account is a debit. Then if I come to the bank account and I see rental income, then I know that rental income account is a credit entry. But this is telling me where was the other entry made. Where was the other entry made? Right. Now, the interesting thing here is that we had an overdraft, right? So we were in a minus of 2,200, right? That's an overdraft. Then when we receive this payment, it allows us to cover the overdraft. So we have reduced the overdraft. So we pay 3,200. So now in our bank account, there is 1,000. All right. So we have assets is equal to equity plus liabilities. So our assets, as you can see here, have increased by 1,000 rand, not by 3,200. And our equity is not affected because this is actually affected. This is income. So it's a plus 3,200, which we received. This is income. And our liabilities are affected because they were 2,200. Now they are 0. So we have completely eliminated the 2,200. Right. So this was a tricky question because normally students would want to say 3,200. That's the increase in assets is equal to 3,200, which is the increase in equity plus 0. But we see there that before this money, this payment, first of all, had to reduce the liability. First of all. Then after that, what was left is ours. Right. So our assets increased by 1,000. And we managed to reduce the liabilities as well. Okay, so you might want to pay attention to this and see the kind of tricky questions that the examiners can ask you. Like I said, all these questions are from previous assessments. Then finally, we come to this. Is the same question here? I hope not. So the entity had a favorable bank balance of 1,200. So in the account, there was 1,200. Then we make a payment out of that bank account, an EFT to a creditor. Now, a creditor is someone who gave us their inventory or whatever service, and we haven't paid yet. We're supposed to pay them. So that's a creditor. So now we are paying that creditor, and we paid 2,400. So it means that we have an overdraft now of 1,200. In other words, we overdrew the account, right? So now our bank account is in the negative. It has moved from being an asset to a liability, right? So if you want to do your journal entries to determine what is going to be debited, what is going to be credited, we see that our bank account has decreased. So obviously we know that's a credit of 2,400. But we also used to owe this guy a creditor, right? And we don't owe him anymore. So we have to, the other leg will be a debit to the creditor, which is 2,400. So one of the tricks that you can use when doing double entry is that you might just need to know one leg of the transaction because the other follows automatically. For example, this is a bank account. Once I credit the bank account, the general ledger, then automatically the other one is a debit. And the account is here is trade payables control or creditors control, right? So like I said, I've prepared. I think I did prepare, and I think that's well prepared. That's what I wanted to say. I like that it's well prepared. I took some time to explain to you the postings on YouTube. How do you do these things of analyzing transactions so they can know what to debit and what to credit? I did 4 YouTube recordings, 15 minutes plus or minus, 15-20 minutes. All right. So if you want, just go there on the YouTube, you will get everything. Right. So this was going to be our double entry. Remember that the rules are you start with your debit, then the credit is below. All right. So in this case, I just wrote it. That's not the most important thing. So our bank account decreased. All right. So our assets obviously decreased. So let's do the assets is equal to equity plus your liabilities. So we know here that we had an asset of 1,200, right? So that was reduced to 0, And we had we previously had a liability of 1,200, right? We previously had a liability of 1,200, which was actually reduced to 0. So this liability was paid off. But now we have an extra 1,200 here as well. No, it's not. Let me try to analyze this so that, so I have 1,200 here that was actually favorable, right? So in the first case, we have, we clear this liability, right? The first 1,200 that we owed this guy. No, I'm making a mistake here. My apologies. We didn't owe this guy 1,200. It's just that we had 1,200 in our account. So I want to apologize for that misinterpretation. We actually owed this guy 2,400. So what happened is that we reduced the 2,400 that we owed, the liability. Right? We reduced that 2,400. But now we owe someone else, which is the bank. We owe the bank a new liability of 1,200. Does that make sense? Because we used our own 1,200 to pay off this guy, and we had to borrow the bank another 1,200. So we reduced our assets by 1,200 because we had 1,200 in the bank, so that was wiped out. Then we had to borrow another 1,200 so that if eventually we pay this guy is 2,400. So these are the type of questions you can expect. They can be slightly tricky. You know, you have to go from having an asset to now having a liability, or from having a liability to an asset. So that type of material you need to be aware of. All right, so this discussion here focused specifically on the double entry. We're going to have another discussion which is very, 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 very important. Now that's important. This is not important. This is important. This is not important. But the discussion we're going to have next is going to be on your VAT and journals. Now that's very, very important, right? So, and I'd like you to make sure that you prepare a learning unit. There's learning unit 5. That's what we're going to cover. And it's learning unit 5. I think it's exercise 5.2. But if I forget the name of the unit is learning unit 5.2, it's called Rundu Dealers. Right. So you go under Rundu Dealers. Now the problem with those type of questions is they come with a lot of marks, like 11 marks, like 13 marks, and you cannot afford to lose such marks. So we're gonna cover that next. We're gonna tell students. So if you are not in one of our Telegram groups, that's where we make the announcement, and you can benefit yourself. Like you said, when studying accounting, always try to practice every day. Try to get somebody to help you, somebody at work. It could be a neighbor. It could be a high school student doing accounting at school. They can help you. These things are very soft to them. They can always help you. But I would like to, for tutorials, we do offer tutorials, right? We do offer tutorials to interested students. So if you are interested, then we allow you to join in. We've seen over time is sometimes we say, okay, if you want to join those extra classes, you have to pay in advance. But then students may be able to get the money in, let's say, in August, end of August, and they have lost a month of learning. So we try to say, okay, you can join now and make arrangements to pay when you get the money. So that is if you want to join extra classes. Otherwise, try to look around for other options. But if you know you will need help, if you can get it early, that's great. So this is our WhatsApp number. If you would like to join us, so what you do is you can join, on this number, you can ask to join our Telegram groups. Now, those are free groups where we post announcements, where we share resources. But you can also choose to join extra classes, which are not the same thing as the Telegram groups. You have to inquire. They will give you the direction. And this is what you need to do. Right, so we have Telegram groups where we're going to post this recording, and other recordings are already posted there. You're going to enjoy them. And all right, so that's totally free. There's about 5,000 students, thousands. Right, so that's a free group. You don't have to pay. And sometimes we offer free classes. You benefit yourself. Why not? But for those who would love to have a private tutor, attend extra classes, prepared for paying students, then you can also ask us on our Telegram groups. Then we can guide you as to what you need to do. Right, so we have come to the end of the session, and I'm going to take any questions. And the questions I'm going to take here are related to the material we covered here. All right, so that's what we're going to do now. If you're happy, you can leave. If you're happy, you can leave. You will receive the recording in our Telegram group. But if you would like to remain behind and ask a few questions, then you are welcome.